Easter has mentioned about Absa, and now this week, now when the corporate paper, EABL issued a corporate paper. Now the conversation about the lending by Absa Kenya to EABL, and we saw that that they had lent 18 billion, right? And this they violated the single obligor principle, where they are not supposed to lend more than 25% of their core capital. And by them lending 18 billion, they had
18.8.
lent 18.8. They had lent that is 40.6% of their core capital. So they were in breach of this CBK requirement. So when this came out, there was a storm about that, and then Absa issued a statement. You guys saw that statement, right? And they said that for us, we only lent these guys, was it 10.8 billion,
which is below the threshold.
Which is below the threshold. The rest, they got them from Absa Group in South Africa, the parent, and other affiliates, where Absa Kenya only acted as an agent. So what do you guys think about that? For me, I think I actually remember I was texting you guys and telling you guys I'm just looking at Absa shares on NSE, to see
what's
if
the
this
effect.
storm, I think if we were sort of in the US, there would have been a big impact before they released the official statement.
Probably. I don't know. I don't know whether it's a spelling or just like a lack of, because I'm looking here at EABL borrowings. It's like, there's a long-term loan from Stanbic, 3.5B at 8.9%. Then there's another one from Standard Chartered, 7.6B, which matures in December 2026. Okay, and then there's a there's a medium-term loan from Absa Bank Kenya. Of 3 billion.
3 billion.
At 7.8. This is the one that had a letter of comfort from Diageo. 7.8B. This matures in December 2026. Then there's another medium-term loan of 4.8B. Again from Absa Bank Kenya, and then in brackets, formerly Barclays Bank of Kenya.
So was it issued during the transition period? Or they have to put it in brackets, the Barclays thing?
No, just I think for clarification on who Absa are, that they rebranded from Barclays to. Anyway, again, 4.8B, this one is repayable in 12 quarterly installments of 400 million beginning July 2022. So they haven't started repaying that one.
What's the rate for that?
8%.
8. It's
unsecured. And then there's a big one, which I think the loan is basically the bond is going to repay. There is a medium-term loan, again from Absa Bank, Kenya, of 11 billion at an interest of 10.3%, which matures in July 2022. So I think this is the one that
is being...
because it's 11B. Just, although this is going to be at a higher rate.
But then you see it expires in July 2022. The one they just took expires after.
It's a 5 years.
So it's the time they're going in for.
So because they are coming, because this one basically in July 2022 you need to pay it off, so you need to have the lump sum ready. So the issue is that it's written clearly in the reports that it's.
Why is it like 11? Have they not been paying the other one, like to reduce it?
So it depends on actually I'm not sure. I don't know whether they were just paying, because I do not think it can't have been like a bond. It's not that they were just paying interest and then it's a bullet payment at the end. Because I
it's
think
a normal loan. You have to, for every repayment there's a component
of principal and interest. So
then how is it that they're borrowing 11 billion, exactly 11 billion?
So that means it's going to, like, all this like borrowings that they have indicated here, like it's going to pay off, I think, portions of.
So let's say it's a coincidence that the figure is tallying.
Let's I think when we have the CFO,
I think they're just EABL is just buying time. That's the bottom line. They want to buy time with the 5-year corporate paper, and
time for what?
To buy time for repayment.
Oh, okay.
Yeah. And do you think that, so in this report, EABL should have stated that some of the loans there is from Absa Group?
Is it the obligation to do that?
Yeah, it's just
Because Absa Kenya has just acted as an agent.
Yeah, that's how you're supposed to say it, because in this case, the way they've stated it, that is what is causing people to be like, you've breached
the CBK code.
The single obligor.
Yeah. Had it been Absa, say Absa, wherever, then that issue would not have been flagged. Yeah. And the other thing, I think, part of the speculations are that it could be ABL might be going to the market because also Absa are like, yo, as guys, we've given you a lot of cash. Probably
We're exposing ourselves too much.
Yeah, probably go look for yeah, either that is one option. Number two, the other option is also EABL could be raising this bond at 12.5, which at the moment is higher than 10 point. Majority of their current loans are less than 12.
Yeah.
Most of them seem to be ranging between 8 and 10.
Yeah.
Does it speak to desperation?
No.
Not at all.
Not necessarily. I think also it could be an anticipation of a higher rate regime in the next coming years, because we're seeing how inflation is going.
Yeah.
It's only a matter of time before, in as much as Keegan has been saying that the CBK may not necessarily have a lot of power to deal with cost push inflation. Yeah, cost push inflation. I think it's just a matter of time before they actually do raise the base rate.
The lending rate at 7%.
Yeah.
But if the banks have not if the lenders have not gone to a table and had the conversation about changing the rates of interest in the face of the inflation that you're currently anticipating or even experiencing, because we talked about this in the other episode, right?
Yeah.
Why would you as a borrower? I think there's a time to borrow, because you know what, these rates are going to increase.
Yeah, see, that's why they are fixing the rate on the bond market right now.
Yeah.
Nice.
Yeah, because it's in that neighborhood.
Yeah.
But Kali has mentioned that's very important. And for me, I think, we've seen the base products, which is normally fuel and food, that normally push inflation, okay?
Yeah.
The prices of fuel are actually going to rise, okay? Because not necessarily because of the taxes and levies, but because of the market forces.
Yeah.
Because we import oil and we don't have any control of it, okay?
Yeah.
Of the price. So if that continues to rise consistently to December, January, CBK are going to revise their lending rate.
Yeah.
And if they do that, the banks the following day, they've revised it.
Yeah.
So what Dan is saying is actually making a lot of sense. There might be an increase in the lending.
Yeah, and you might find that maybe even if they go back to Absa, Absa are like, okay, we can give you funds, but
now
it's going to be very short term.
Yeah.
So that they can take advantage of any increase in rates. Because even when you're looking at the global supply, we've seen the UK, the way they're struggling with lack of petrol in their stations. It's an energy problem, which they're arguing that we do have enough reserves, we just don't have the truck drivers to transport it, which I'm not really buying.
Doesn't make sense.
I'm not really buying. So I think the underlying, because this renewable energy sources have been seen to be because they're very inconsistent, especially with wind, which is very heavily used in Europe, the UK and Europe in generally. It's very inconsistent because it's dependent on how
forces of nature.
So I think there's going to be greater demand even for fuel, which is again going to boost more. The price is higher, so the landed costs are going to be higher. So for me, I think it's a matter of time before the CBK actually raise their base rate.
I was reading some report about the time we talked about ESG, the environmental component of that. I was reading some report that was saying that the demand for coal as a source of fuel of energy is actually already increasing. Is it in China? In the production of, I don't know, some metals, metallic products and all that. So the cost and demand for coal as a source of energy is really increasing, and coal is a substitute, sort of a very sort of last resort substitute to fuel.
Yeah.
So if coal is increasing, it shows you what's happening up the pyramid. Fuel is also increasing.
So people are sort of resorting to coal
Alternatives.
and by them resorting to the coal alternative, it raises the price because the demand is going up.
No, it's the other way around. That the price of fuel is high, and so people are running to other alternatives. If you can find an alternative, go for it. And so you see, if the alternative, if I'm selling the alternative, and I know that you don't have an option, you're running from the main product.
I'm going to raise the price.
Yeah, exactly.
Yeah, it's all the same thing. For me, going back to corporate paper, I am of the opinion that if a company wants to take a corporate paper, wants to issue a corporate paper in the near future, they should do it before next year. And here are my reasons. Next year, we are going, when it's an election time, okay?
Wow.
You normally see the election wave in Kenya in terms of economic performance. So next year, you'll find there'll be a lot of economic uncertainty, okay? So the people that money have in their the money that people have in their pockets, they'll be shy to spend it because it's an uncertain moment. So this generally impacts demand for products across the board for many companies. Okay, so cash flow is a bit of is strained for many companies next year. And then banks are in that position where they are shy to offer many people credit because they're like, this is an uncertain moment. Will people repay really? The risk is high. So if you want to take a corporate paper, take it before the end of December.
To issue.
Yeah, if you want to issue before the end of December.
Oh, yeah. Now we go to the Absa single obligor thing.
Yeah.
Now what did I want to say about that? So it's not news, like you said, that you are looking at the NSE chart and trying to see what would be the implication of that news into the market on Absa's performance. It's not a new thing. The CBK report, 2020 report, said that is the most abused regulation. It's the most abused regulation. And this is a very recent report, 2020. So it shows that the bankers, when they're by themselves, they're like, please, Patrick, tunacheza chini ya maji, they can do things behind Patrick's back, So I don't think, that's why I was like, when you said that, I was like, nah, not really. I don't think it's going to be, the effect is going to be that direct. That directly felt in the market, in the price.
For some of our viewers who are listening to us outside Kenya, he's referring to Dr. Patrick Njoroge, the governor of CBK. He happens to be his good friend. You hear they're on first name basis. So moving along, gents. Moving along, we see that in our neighboring country, in Uganda.
Wait. But you've seen the relationship between, there seems to be a lot of board and high level plays between EABL and Absa.
I've taken friendship to the boardrooms.
No, it's a risk of familiarity, and there's absolutely nothing wrong with that because people change jobs.
Like you have said, it's a risk. Like you have said, it's a risk.
Familiarity.
Yeah, and there are measures that have to be taken to ensure that whatever you two, or the number of people in this sort of arrangement, so you're familiar. So we have to make sure that every action you take is not on the basis of your familiarity, but it is very objective.
Okay, just to paint the picture well for our viewers to get, so some of the people who are in the board and senior management of EABL were also in Absa previously in the boards and senior management and vice versa. That's why that concern of risk of familiarity, because you find that EABL has appointed Absa as what for this corporate paper?
Arrangers.
So
it's Absa Securities and Absa Bank.
So from that relation is where these gentlemen are trying to disturb you as an investor by telling you that there's a problem, but there's absolutely no problem there.
Yeah, I think from a relationship point of view, it makes things easier. If you want to go get a loan or financing, if it's an overdraft facility, if you have people who have connects to Absa or whatever, it makes the transactions easier and everything. But then again, as you said, it raises a good point. The familiarity risk, it could be you're just lending it out because of
This is your guy.
Yeah, this is your guy. You haven't looked at the fundamentals to see whether
You tend to overlook a lot of things.
Yeah.
But you know, that takes me back to a conversation that I was in, and the NCBA CEO John Gashora was saying that some of the things that people, you know, tend to overlook in Kenya is when getting credit, it's about two things mostly. Getting good credit, it's about your negotiation skills. And this is something that people overlook a lot, especially if you're owning a business. You know, you have to really have good negotiation skills, because you have to go there and say, hey, my business is a high cash flow business. You know, there's money coming in each and every day, you know, so that reduces my risk. Don't charge me at 12.5%, charge me at this and this and this. And then number two is actually relationship. You know, you need to have a good relationship. For example, if you're in a mall and you're on ground floor, and on second floor there's a bank, okay, and you're selling a couple of products, you know, when you see the manager passing by there, say hi, you know, give him or her a hamper, you know, these are some of our products, let me give you this.
What do you mean by a hamper?
A relationship.
What do you mean by a hamper?
You know, a gift hamper.
This is Kenya.
You know, you try and you know, have a relationship with the bank and the likes. So people sometimes tend to overlook that.
You see, Kenyans, okay, let me generalize. Some. Oh, thank you. Some Kenyans, most Kenyans actually, we fear bureaucracies. We're like, the system is too big for us to make any impact on it, especially with regards to making changes. Understand?
Yeah.
So that's why people pay so much to accountants to handle their KRA stuff, even things that only require you to make a few clicks. Yeah. Because they're like, hey, mambo ya KRA, me, I don't want any issues to do with it. How much do you want? How much do you want for you to do this job? I'll pay you that money. So the same comes to all the banks. Do you know that if you go to a bank, and I think this is very important for our investors, for our listeners and viewers.
It's okay.
Yeah. Even investors.
Yeah, investors are highly encouraged.
Sponsors. You can walk to a bank and go to the relationship manager or whoever it is in the relationship department, sit them down, have a conversation, just like Egan has said.
Yeah.
But you know what, this is what is happening in my business. Because they're in business, and a business is not what you do, is how you do it.
But in this case, I think for Kenya's case, yes, they're in business, but with the government, mostly.
Yeah, because now we're competing with the government for this.
On that note, if Absa, assuming, okay, we raise good questions, but assuming this 11 billion that we are raising to the bond, from the bond, assuming it's going to pay off the Absa debt, that means Absa is going to have 11B in cash, which is most likely going to invest in government bonds.
Yeah, I mean, the trend has shown, and we've talked about that, and the way the government is crowding out the private sector, and it's a big issue.
Yeah, because ideally this 11B should go in an ideal world.
But have we not just said that? Probably.
But you know, it's not the bank's
is going
fault.
to use this money for expansionary measures and like
Absa.
the solar. Oh, EABL, my goodness.
No, EABL is raising.
To repay Absa.
Yeah, they've said they're using it to. The proceeds from the bond is going to repay.
You know,
so the money they're getting from Absa, they're just going to put it to the government.
Yeah.
Send it to the government.
Absa is most likely just going to invest it in government bonds.
And you know what? I happen to be a good friend of KBA, Kenya Bankers Association. And now let me try and help you guys.
Tell us.
It's not the fault of the banks. You cannot blame the banks.
Because they're there for the money.
At the end of... No, not because they're...
Yeah, they are.
Let me put it this way. At the end of the day, the banks have shareholders. The banks have people that they have to account to. There are people who have given... People like you and me who've given banks our money for them to give us returns.
Yeah.
So at the end of the day, banks are private entities which need to make money. You cannot blame banks because even, you know, it's about decisions, and this is what we make. We even do it at a personal level. If you have one investment opportunity and another investment opportunity, you go with the investment opportunity that gives you the highest. That's best for you. Okay, so the banks are just doing that. So let's not demonize the banks. You know, government paper, tax free. Okay, very good
Security.
rates. You give it to them. So the people here that we should actually be pointing the fingers to are guys at Treasury, because they are the ones crowding out practicing Kenyans like me.
Well, with that regard, I was having a conversation with a friend of mine. Then I was like, it hit me during that conversation that as an investor, I love banks, but as a consumer, I hate banks. You get, because banks make a lot of, again, like from what you've said, they're businesses, they're companies, and the sole responsibility of the stewards of a company, the management, is to make money or wealth for the shareholders.
Yeah.
Which is me as an investor. Now that's why I like buying bank stocks, for example.
Yeah.
Because I know that if you look, the Kenyan bank stocks are really performing well.
Yeah, they're good.
I think regionally they're the best.
Yeah,
Like on the bourse, I think it's only Safaricom that would give them a run for their money. But after Safaricom, it is the banks that are most profitable.
Yeah.
But again, that's me as an investor vouching for banks. Now, let's look at me as a consumer now. Now I have to go to the bank to take a loan. Then they're prioritizing the government. And if they have to give me the kidogo money that they're left with after giving the government what they think is enough for the government, they charge me a lot of interest on that. So for that reason, I hate banks as a consumer. And another thing, it's very important for guys to know that it's very important for guys to read the contracts. What is it called? Terms, TNCs, yeah? Mm-hmm. Before even you get a bank account and all that. Because there's some that are very crazy. One would be like, if you have less than X amount in this bank account, there's no interest that you'll be earning. Who knows that? And they hide them. They hide such clauses in very small letters, in between very many paragraphs. You understand?
Yeah.
Yeah.